G'day, folks, and welcome back to another edition of the Rough Consensus podcast. Today, I have the great pleasure of interviewing Larry Lepard, who I met briefly in Nashville and really wanted to pick his brains on this monetary transition we're going through, how we actually think about sound money assets like Bitcoin, like gold, like silver, how to really understand this monetary transition, the hole that central bankers and politicians find themselves in, and really what that transition looks like. And in many ways, this was a conversation that I wanted to have to understand how to talk to my father as well, right? Because he often talks to me about where do I put my money for retirement? How do we really survive in this kind of transition? And Larry is the perfect person to talk to about how you actually navigate these things as an individual, right? All of us are at a different path in our life's journey, and understanding that like long-term time horizon versus what is likely to come in the next couple of decades is really a topic that we focus on. Now, this is one of those conversations where we actually just started rolling. So in terms of the introduction, we're just going to get straight into it because really the camera started rolling and the conversation just kicked off. So I think you're really going to enjoy it. Just before we get started, do check out our newsletter over at checkonchain.com. We do have a charting suite, which has got all of the on-chain charts that I personally use, as well as derivatives and ETF metrics. And over at the newsletter, we actually release 2 weekly updates and a masterclass every single week. And we also have a Q&A that goes on once a month. So if you have any questions, you can always ask, and I will package those up and build it into a monthly Q&A. So do check us out over at checkonchain.com and enjoy the episode. Cheers.
If you're 30 and you know that you've got a long runway in front of you and a lot of earning power and so forth, yeah, if this thing goes up and down a bit, who cares, right? But if you're 60 or 70 and you put all your money into something and it has a 60% drawdown, well, that's kind of bad. I mean, you know,
Absolutely.
and so I mean, I think older people are right to be somewhat cautious, but that doesn't mean they hold zero. And obviously, I'm glad you talked your father into it because it is the best performing financial asset. It's going to, in my opinion, it's going to continue to be the best performing financial asset. And so, it's if you can live through the roller coaster, which, as we all know, kind of never lasts more than 4 years, then you're fine. But if you're on your deathbed and you might need the money, your heirs might need the money in a year or two. Well, you probably shouldn't have all your money in Bitcoin.
That's it.
You got to you got to have so it's just a matter of, I mean, it's not a zero or a one. I mean, when I'm talking to my older clients, I'm like, look, I'm not asking you to put all your money into Bitcoin. I'm just saying that having zero Bitcoin is insane because it's got more asymmetry than anything else in the world right now by a large measure. I've never seen anything this good, even at this price. And that's the funny thing I encounter, and I've almost built a ton of golds people, but I encounter a lot of people looking at it and they're making the mistake of fixing on older prices. Well, geez, yeah, I get it for you. You bought it at 5,000, and it's at 60,000 now. How can I pay that much? And I'm like, yeah, but you don't understand. When I was buying it at 5,000, I was looking at Max Kaiser who bought it at 2. You know, and you kind of just have to get comfortable with the fact that what Sailor said is correct. It is going up forever, Laura. And so I mean, if you bought it at 60 and it goes to 600 and then it goes to 6 million, both of which I think will occur now over multiple years, you're going to be really glad you bought it at 60. So, but you've got to have patience, right? And we all know that.
Absolutely.
Those of us who are in it, know it, have studied it, etc., say that. The only Bitcoiners the only thing I think is a warning to people, and the only time I've seen people get hurt in this, and I think it's incumbent upon all the Bitcoin cheerleaders, and I'm one of them, you're one of them, we all are, we believe in it, is to fully explain to a buyer what they're buying and what it can do. Because the only time I've ever seen anybody get hurt at is when they got all excited about it, they FOMO'd into it right at a peak or near a peak. Then it had a big drop. They concluded they were wrong and they blew it out at the bottom, and that's, I mean, they did part of it right. They bought some, but they didn't do the other part right. They didn't dollar cost average down. They instead let the price convince them that they were in some way wrong, and they sold. Whereas if they just hung on, as we all know, everybody who's been in it for 4 years is ahead, of their cost basis, and I think that pattern will continue. But for an older person who's got risk, aversion, it should be an aggressive part of their portfolio that if it goes down 60%, it's not gonna change their lifestyle or scare them. And so I don't know what that means, but I mean, if you're 70 or 80, maybe it's 10% or 20% of your portfolio. I mean, that's just a guess. I mean, I think everybody's different. I know 70-year-olds who have all their money in it. but they fully understand it and they believe in it longer term. So, it's just it's a matter of understanding what you're buying. But having been an investment professional for 40 plus years, I've seen, the first two things you should look at with respect to an investment are what's the pattern? What has it done in the past? Because it's probably going to do that in the future to some degree. And then, what's the performance? And, the pattern in the past is it's been volatile with some big drawdowns. So, if you're buying it and the money you're using to buy it, you think to yourself, oh, if it goes down 60%, I'm gonna want to shoot myself. Well, then you're buying too much. But if you buy it and you say to yourself, I know that in a 10-year time frame it's going to be up a lot, and if it goes down 50%, I don't care, then that's the right amount to buy. And then if it does go down 50%, as you've done, I've done, others have done, you think to yourself, oh, this is great, it's on sale, and now I'm going to buy more. So,
And it's very interesting because, I had a great event yesterday. I bought the very first stock I ever bought was a company called Silver Mines. And it's this tiny little explorer.
Well, yeah, it's just gotten into trouble too.
They got 50%ed the other week on Monday. And this is one of those great examples of when you look at something like gold and Bitcoin and sound money assets, they have no counterparty risk. And in this instance, this particular stock, right, they've got the biggest undeveloped silver deposit ever, right?
I know it well. I owned a very small slice of it, so I know. And when that happened, I was disappointed.
And that's the thing, right? They've got all the way through to the government has approved the mine, right? They're breaking ground this year. And then some court case comes along, and I think it was for a transmission line, right? Some tiny little thing. And it's and then the whole thing goes, you know what? We may not be able to build this thing. And the price is 50%. But Bitcoin and gold and all these other assets, they are immune from that kind of pressure, which is a really interesting dynamic of them.
Yeah, I mean, that is one of the nice things. I mean, I've been a professional investor in stocks for my entire career as well, and you can find really good businesses that are kind of bulletproof that even crummy managers can't mess up. Although a crummy manager can mess up anything.
Yeah.
But when you're dealing with stocks, you're always dealing with how good is this management team, and are they going to do the things that are in the best interest of the shareholders? And that's a big question mark in many, many instances. In the case of Bitcoin, because it's kind of a mathematical protocol and because the core developers are constrained, in the sense that anything they propose has to be approved by all the nodes, it's kind of it's a really nice feeling to know that there's no management team to F it up. You know what I mean? So
yep.
I like that a lot as one of its characteristics. Yeah.
I think one of the other interesting dynamics that I keep coming back to is, and it often astounds people, you say, Bitcoin is actually bigger than the British pound, right? It competes with some of the biggest currencies in the world. And then the other one is that it's one of the few assets that is global, right? We were in Istanbul last year, which is fantastic. And we went to the, I forget what the museum was, but they had a wall of currencies. And there were all these Byzantine and Roman and Greek coins. And just before we went in, I went down to the cash register and I pulled out, it was $150, but it was in lira. And it's this fist, I had to fold my wallet, right? So much paper. And you realize that these coins, excluding their antique value, the metal just in those coins is worth more than this wad of cash in my back pocket.
Oh, absolutely.
And you also notice all the gold dealers, right? Everywhere you go to get a currency exchange, you've got their little 1 gram, 5 gram gold bars. And Bitcoin and gold are the only assets that have a global trading pair in every fiat currency. That's just one of those things people tend to miss.
Yeah, it really is. I mean, I've always said that you can go to any. I mean, 8 billion people on the planet know what gold is. They know it's money. 5,000 years of history. It's just got an enormous network effect in that respect. And yeah, Turkey's had a lot of inflation, and what I've been told by a couple of people I know who live there or been there, is that the young people are buying Bitcoin, the old people are buying gold. And it makes perfect sense. I mean, it's, the one thing about gold can be volatile too, but typically volatility in gold is down 20%, not down, 50, 60, 70%. So, that volatility generally irons itself out pretty quickly in both of these assets because, they're not being printed. And that's really the underlying theme here. And the reason why these things are going to work so well is, the other side of this coin. I mean, if governments and central banks throughout the world were behaving in a responsible fashion, what we're proposing wouldn't be as relevant. But I think anybody who takes the time to read the news and investigate the facts can only conclude that governments and central banks are operating in a very irresponsible fashion and probably with growing irresponsibility, which is why I think ultimately we're going to get to hyper Bitcoinization, but that's not tomorrow. That's years away. But we're heading in that direction because, I mean, it's just math. I mean, you cannot continue to keep a sovereign debt bubble going unless you print more money. Otherwise it'll collapse on itself. I mean, very deflationary. And so, we know that at the end of the day, and we know it because of the way they behaved in the past, we know that at the end of the day, these governments will print more money. They just have to. I mean, they say they won't and so on and so forth, but they have to. Because if they don't, it's going to collapse, and no government, they know that if it collapses, that's the revolution and they're all thrown out of office. So, the choice of a collapse versus, printing some money and creating inflation, they'll pick inflation every time. We've seen
It's the
it.
politically expedient way. And what I found interesting is
Yeah,
they've got, even on the Fed's website, they've got papers saying that inflation is the preferred tax because the average person cannot understand it. And we see it today, right? They're talking about price gouging as it's these greedy
yeah.
corporations. And
Oh,
I
yeah,
looked at some
yeah,
of our
yeah.
supermarkets, right? 3% profit margins. It's like they're
Yeah.
price gouging. I'm like, man.
Yeah, I mean, it's so the gaslighting that they're doing on us is just so disgusting. I mean, I mean, I can't remember. I've seen many of the Fed people and other people, Congress critters and stuff saying things like, these corporations are just being incredibly greedy and we're going to claim it has nothing to do with the corporations. How about the fact that you guys grew the money supply by 40%? Actually closer to 50% if you add a couple of years together. I mean, there's your inflation right there, and you just got more money chasing the same number of goods. And so, yeah, it's a real fundamental problem that is going to get solved as we are forced into transitioning to a sound money currency, which I think we will be. I think market events are going to make this problem larger, more evident to more people, and eventually we're going to have some kind of a crisis, and that's going to, if the crisis is bad enough, which I eventually believe it could be, people are going to demand sound money because they're going to realize that, living in an inflationary world is just hellish. I mean, you work your entire life to save money. I mean, I'm writing a book, and I've got a lot of anecdotes in there, but one of the biggest ones was that in 2008, when the GFC hit, at the time in the United States, you could earn a 5 or 6% yield on a CD, which is a bank certificate of deposit, relatively short term, relatively safe, right? In some cases, I think guaranteed. And the GFC comes along, and Bernanke puts in ZIRP, which stands for zero interest rate policy. Bingo, rates go to zero, CDs go to zero, and people would work their entire lives to maybe save $500,000 or $1 million or whatever, and they were living off of the interest that they were getting from their CDs. They couldn't do it anymore. It just went away. And they're in the 70s or 80s. It's kind of tragic because it's not easy for them to go back to work. I mean, for young people, young people have the benefit of having a lot of earnings power and years ahead of them. So anyway, I digress, but the point is, it's a very, very broken system, James, as you know, and it's unfortunate. And you could get all bummed out and gloom and doom about it, but I prefer to be optimistic about it because I think that, the trends in force in society today are quickly driving us to, the end point of fiat currencies as we now know them. And I think when that occurs, inflation is too high, people are screaming at the top of their lungs, we will migrate naturally or perhaps unnaturally. I mean, it depends on how much the government fights it and gets involved, to a sound money system. Just because people will be fed up with, the inflation.
Yeah, there's a couple of things. I mean, one thing is I've always been amazed how much pain the average person can take before they like make that switch. But my old man, God love him, he actually tells me that I'm Cyclops because I have this one focus, like it's Bitcoin, it's Bitcoin, it's Bitcoin. And I've recently kind of found my affinity for gold. So now I say you can't call me that now because I've got two
Oh, that's
assets.
interesting.
But the interesting thing is, and what I'd like to get your thoughts on is, obviously this has been coming for a long, long time, right? They've been talking about debt forever, time infinitum.
Oh, absolutely.
Why now? What has actually changed in the broader fundamentals that, because I talk about money printing all the time. It's the only way out. It kind of, it just mathematically makes sense. But why is now, or the next couple of years, next decade, why is that the most relevant time for this to actually come to a head?
Yeah, so it's just that we keep getting further and further down the road, and if anybody who understands math and understands compound functions realizes that if you keep growing something at a compound annual rate, above zero, eventually the line kind of goes straight up, and that's kind of the stage that we're at. In the U.S. with our interest expenses, the federal interest expense, or with the federal debt, I mean, it took us 200 and some odd years to create, 11 trillion of federal debt. We did that in the last 4 years, and now we're adding arguably, 2, 3, 4 a year. I mean, even the U.S. federal income statement really isn't honest. I mean, every year, we have an operating deficit, U.S. federal deficit, and yet every year the debt goes up more than that deficit. So there's something that's not getting accounted for in that the P&L. So I think James, it's just that things are kind of coming to a head. I mean, 71 was the beginning of the fiat era, and we lived off of our history and trust in the dollar and trust in the American Federal Reserve and responsible behavior and so on and so forth. Not to say we were that responsible then, but the 71 was a quasi gold standard. It was a gold exchange standard, and what's happened is just it's slow but sure. We've taken bricks out of the wall, or another way to look at it is like the Jenga game, where we're pulling little pieces of wood out of the structure. We get rid of Glass-Steagall. We allow the Fed to pay interest on excess reserves, which sanitize the inflation from '08. There are just a million little things that have taken place. In the GFC, we printed a ton of money and great ZERP. The Europeans created negative interest rates, which I'd never heard of before, which is kind of a crazy concept. And then in COVID, they went further and they literally sent people money, money they didn't have. They just, printed the checks and sent them, and businesses too. In fact, businesses got more than people. The PPP program was huge, and tons of businesses got huge subsidies. And so with each of, and by the way, the scale and time of each of these, they're getting closer together and they're getting larger in scale. I mean, it's, from 71 to call it LTCM bailout of 1998 was a long time. There were some bailouts in there and there was a lot of fiat games going on, but it wasn't as bad as it is now. And then the dot-com bubble burst and, they took interest rates down to 1%. Hadn't seen that since the Depression. And so, that created the housing bubble, and then GFC happened and it took them down to zero and printed, I don't know, $3 trillion over 4 years. And then COVID happened and they took them into zero again and they printed 5 trillion in the course of, 18 months or 2 years. So, and so the time between events is getting shorter and the amount of money getting printed is getting larger, and the mathematics of the compounding is getting larger, such that all of the slopes of all the curve, the second derivative, is increasing. So, that leads me to conclude that we are, quote unquote, coming to a head here. Now, people shouldn't listen to me as if I've got the answer, because I thought 2008 was the end, and obviously it wasn't. They had a lot of tricks up their sleeve, and they'll probably have some tricks up their sleeve this time. But, I think the trend is quite clear. And, how long does it take until hyper-Bitcoinization or, the dollar and the fiat currencies totally fail? Yeah, my guess is they might have another 10 years of can kicking in them, but we're getting closer, a lot closer. And if you use the fourth turning model, and these things typically last 20 to 30 years long, and you consider that, the kickoff of this fourth turning was '08. I mean, I think that was a big wake-up call, right? I mean, that's when I really woke up to the fact that, oh my God, these guys are out of control and they're going to print money forever to keep this thing going. 20 years from that would be 2028, 30 years would be 2038. So I feel like there'll be some resolution to this issue in the next 10 years, pretty certainly, probably less. And as the issue comes to get resolved, what'll happen is we'll have enormous inflation, a lot of money printing. They won't be able to stop. And the way a currency fails or quote unquote hyperinflates is when everyone loses confidence in it. And, we're starting to see that. I mean, there are two very good clues of that. One is a record high gold price we just achieved. In US dollars, it's over $2,500. I'm sure in Australian dollars, it's a record as well. And then, the Bitcoin price is not at a record, but it's awfully close. I mean, record was in the low 70s. We're pretty close to that in the 60s. So, and maybe we're a tad below it. And I've also observed historically that when these things move, gold tends to smell things first and move first because it's more broadly distributed and I think more geopolitically sensitive to problems coming. And so, my sense, if the pattern holds from the last few times this happened, my sense is that, in the next, 3 to 6 months, Bitcoin's going to move. It's going to move really hard and faster than gold. I mean, I think Bitcoin's a superior investment to gold if you can handle the volatility. But, sometimes it lags it a little bit. So, I don't know if I really answered your question, but I've given you kind of my thoughts on it. I mean, nobody knows with certainty exactly when it's going to happen. and nobody knows if the dollar and all these fiat currencies are going to fail. I mean, there is a scenario which people laugh at when I lay it out for them, but it's not impossible that governments suddenly get ultra responsible, and
That's the bear
well,
case.
yeah, the bear case. I mean, and they means test Social Security, and they balance the budget and all this. I mean, all of which, by the way, would cause a very big economic downturn and kind of. I mean, I think we're kind of gone beyond the event horizon on this thing, where they can actually go back and restore us to sound money, but they could try. Certainly to a degree, Powell tried when he took rates from 0 to 550. So, they're going to continue to try and continue to throw sand in our face. It's not going to just make the investment we're making an easy investment. But I think in terms of, the longer term trends, they're pretty well trapped. And so, the way I see this unfolding is, we have higher inflation in our future, and then perhaps that higher inflation becomes really high inflation. And at that point in time, when everyone realizes that, the currency is being printed to, you're taking out new credit cards to pay off your minimums on your old credit cards, kind of what the U.S. is doing. That the money's no good, and that's how other hyperinflations have occurred. When everyone recognizes the money's no good, it is no good. There's no demand for it. Nobody wants to hold it. I mean, in Weimar Germany, they were changing the price of things every hour or every day, at the end, because there was just so much inflation. It was just so rapid, and we're not there yet. We're not even anywhere close to that. I'm not suggesting we have to go there. I think we could just have a period of very high inflation for a bunch of years, and then people would scream and we'd return to a sound money standard. I mean, this all sounds kind of terrifying and negative, and obviously, high inflation and or hyperinflation are extremely bad events, but they're not unsolvable. I mean, many countries have gone through these problems before, and what they do, if they're smart, is they return to some form of sound currency. They either back their currency with gold or silver, or they go on somebody else's currency. I mean, Ecuador in 2000 hyperinflated, and Ecuador went on the dollar standard, and they've done just fine on the dollar standard. So there's a lot of inflation in the dollar, but it was less than what Ecuador did with their own currency. So, it's the kind of thing where I think what is called for is monetary reform, and I view the least painful way to do it and to be fair to everybody would be to in a structured manner say, here's how we're going to kind of return to sound money, and it's been done. I mean, the U.S. after World War II, or I mean after the Civil War, the U.S. printed something called a greenback, which was really just a fake dollar, and it wasn't backed by gold. You couldn't exchange it for gold. And the minute they started printing them, it depreciated against gold. So that by the end of the Civil War, a dollar greenback was worth 30 cents worth of gold. So it had lost 70% of its power, purchasing power in 5 years. And it took a while, but between 65 and 1879, we actually got back on the gold standard. The inflation was rough, and there was a big push, and they got back on the gold standard. And so it's, at any point in time, returning to sound money is a choice. And if we make it, things will get much better. I mean, that's, kind of by definition.
Where where you see these they call them monetary illusions, where you go to the restaurant and they've whited out the loss of the face in the currency. They've whited out the price and there's a new price. We've seen it more in Australia here. You go to the supermarket and they almost have these pens where, because people are now starting to steal and the shrinkage of these supermarkets is higher and higher, you start seeing these things where it's yeah, they're actually this is Australia. We're a well-off country, and people are clearly stealing things because they can't afford them. They can't chase these things. So there's that loss of faith in the currency playing out in the behavior of people over time. And the other thing I just noted is this is a historical phenomena, right? Even in the 1880s, you've got countries and nation states, they default to the print, right? That is the way out of these things. And we've seen this throughout human history. It is the least painful for the government because people don't quite understand what's going on. It's slow. It happens in the background. They can't quite get their head around it. And it's very different to raising taxes. Because if you tell people, hey, we're going to raise taxes, they get cranky at it. Whereas if you just kind of debase the money, people will fight and debate over whether it's actually happening or not and who's responsible.
Well, that's exactly right. It's just that's right. It's a subtle and confusing issue to many people. And as you can see, I don't know how much you follow U.S. politics right now, but the Dems are trying to make a lot of hay by saying that it's price gouging on the part of corporations that's causing inflation. hasn't have anything to do with the fact that the money supply doubled, or didn't double, but grew 50% in the last couple of years. So and I mean, honestly, I think there are a lot of voters who buy that. Oh yeah, it's those evil corporations. And it doesn't have anything to do with the Federal Reserve. They don't even know what the Federal Reserve is. So it's a rather sophisticated form of theft and fraud. And to be frank, that's part of why I'm writing the book I'm writing. I mean, it should be out at the end of this year, and the goal of the book is to explain how we got here, explain what happened, and make an average person, an average citizen, really in any country, kind of aware of the issue and how they can protect themselves, and then angry enough to perhaps demand political reform. I mean, I think there are candidates in the U.S., for example, who and politicians who understand this issue. Not many, but a few. And as the issue gets larger and larger and more painful, and everyone is screaming about how much they're suffering under the inflation, they're going to be candidates who are going to step up and say, hey, I'm anti-inflation. I think we should go to a sound money standard, and the choices being gold and Bitcoin, and that they'll get voted in, and we will move in that direction. I mean, the book I'm writing also tells policymakers what they should do. I mean, I think the first thing they should do is they should make gold, silver, and Bitcoin all legal tender, so that there's no capital gains tax associated with holding these things, right? They're money. And so if we have four kinds of money, dollar, gold, silver, Bitcoin, let's say, just to pick four examples, and they're all legal tender, and so you can trade with them, you can, do contracts in gold, you can, all the above. There's no tax on, transactions in them. And let them compete and see who comes out at the top, on a store of value basis, I'm pretty sure, I know who will win, and that's Bitcoin. On a transaction basis, a means of exchange, method of exchange basis, well, we got a little bit of work to do there. I mean, the Lightning Network is nice, but it's still pretty undeveloped and nascent. I mean, when you consider how big the credit card networks are as a comparison. So, but it's a broken system, and some of us see it, and a lot of people don't see it, and they're being distracted by the political people who are trying to get them to fight amongst themselves rather than recognize that the enemy's in Washington, D.C.
G'day, folks. I just want to take a very quick moment to remind you of our partnership with the Bitcoin Advisor, who are market leaders in the world of multi-sig vaults, collaborative security, and inheritance planning. As I grow older, I found myself thinking more and more about that long-term question of what would happen if I didn't come home one day, but also the security and peace of mind of how do I secure my seed phrase and my coins for life. Now, what I decided to do is run my loved ones through a test, and without any of my guidance, spend a coin from my cold wallet. And what I quickly found out is there was a whole laundry list of ways that my coins could have become lost, locked, or sent to the wrong address, and I just didn't have the confidence they'd be able to access my proof of work if I wasn't there to help them. So the Bitcoin Advisor has a team of people around the world. Many of them are my friends, and you've seen them on Twitter, podcasts, and in the conference circuit. They are there to help onboard people and remove those single points of failure, many of which you may not have thought about in your long-term custody setup. So if you are interested, head over to our landing page in the link below, book a free, no-hassle consultation, and secure your coins for life. Thanks, and let's get back to the episode. And something that I've definitely noticed when I think about, my background's engineering, so I try to look at things like a mechanical system. And when I look for some kind of an inflection point, interest rates coming all the way down over decades and hitting the zero bound, particularly for the US, which is the global reserve, I think it'd be very hard pressed getting US rates negative. That has to be some kind of an inflection point. And I was talking with TXMC about this the other day. Once you get a bounce higher from interest rates, which we have seen, the only stop there is really to set a higher low in that cash rate. So that to me feels like a trend shift the market's not quite ready for in full. It's thinking about it, but it's not quite there yet. But the other one is that the Fed and all central banks, they are more or less trapped because the size of government largesse, right? There's the fiscal side that they can't really control, and that's more or less just completely off the rails. But there's this, I've heard the term that the Fed's out of bullets. And certainly when I don't think anyone believed that Jay could get them up to 5.5%. I think that was a remarkable feat, to be honest. And you got to give him credit for actually achieving rates that high, because that was a scary time. But in a way, he's got some bullets back, right? Because they can drop rates. But the question is, how effective is that really going to be? Because we're in this world where fiscal is actually dominating what's going on. Government largesse is actually dominating. I know Luke Groman's also talked about, I guess you would call it the bazooka, which is where they just revalue gold and say, hey, it's $20,000 an ounce now. And as a result, we get, 5 trillion in the treasury and we can now pay off debt or do whatever I have to do. In terms of like the jawboning, I've been very impressed with how much the Fed and central banks can actually steer the market and point them in the right direction. It's been very remarkable. Like, it's all narrative, and investors around the world, they listen to it. They kind of stick on every Fed meeting. I've been amazed by watching this mechanic play
well,
out.
I've been watching for 40 years, and I mean, that's right. I mean, they had a problem last fall. It's almost a year ago now, where the 10-year went up very quickly, went up over 5%, and they came out with 10 or 15 releases that said, "Oh, the rate hiking cycle's over," and that brought the rate right back down into the threes. So yeah, they can jump on it a lot. There's no doubt about that, and it's part of the problem. I mean, you just shouldn't have 12 academics, setting the price of money. I mean, money should be set by the free market, it's supply and demand. I mean, demand for investment opportunities and the supply of savings capital, and those two should balance at some price. But we're so far away from that, and everyone is so dyed-in-the-wool Keynesian that you mention something like that, and people think you're a conspiracy case or a conspiracy nut or something. I mean, it's just, and yet, I think even the elites have to look around the world today and look at the facts and say, this isn't good. I mean, there are a lot more of us than there are of them. My suspicion is that, I mean, they're going to have to they're going to have to change, or else they're going to have problems, is kind of what I see. So, yeah, it's a messy situation for sure.
The other concept that I've been playing around with recently, and I think about it in terms of things like the dollar, right? So there's this idea I'm playing around with, is there's a gravity, there's like a natural gravity. So in the economy, the natural state of play is a Jeff Booth style deflation, because we become more productive. We don't need 50 guys out there with a scythe. We can just have one guy on a tractor. So, the net production capacity of society with technology is deflationary. But then there's the managed outcome. And I think I found this framework really useful for me trying to think about it. Where does the world want to go? The dollar probably wants to strengthen in a Brent Johnson style, right? Dollar just takes over because it has that demand. But then there's the managed outcome. And this is in terms of like thinking about how to position for markets and surviving and picking assets. In many ways, I've thought about, well, I need to look for the impulse is going to probably be some kind of deflationary sell-off, whatever it is. But the net result is going to be they're going to step in and have to patch this thing over. And that's a framework I find really useful.
That's exactly right. And that's how I see it too. I mean, look, they try to behave responsibly until something breaks, and then something breaks and they have to come in, Mario Draghi style, and say we're going to do whatever it takes. I mean, they sent out $16 trillion in swaps at the GFC, and I don't know what they did in COVID, but it was a big number as well. And yeah, I mean, something will break, and when it breaks, the printer will get turned on full speed, and the Fed balance sheet is going to go from the 7 that it's at now to 20, and inflation is going to be raging once again. So they've got themselves painted into a very tight corner. But they've got a lot of tools at their disposal. They've got the Exchange Stabilization Fund. They can buy the markets. They can manipulate gold and silver, and they do. Maybe someday they'll be able to manipulate Bitcoin. I don't know. I don't think they are, but it's possible that in the future they could learn how to. Yeah, it's a real problem. I mean, we're fighting a very big, powerful beast, which is really kind of at its core the U.S. military. I mean, they're the most powerful military in the world, and people have to respect the U.S. government as a result of it. But it's all fading, James. It's all, they're really big cracks in their armor, really big, and it's not going to take much, once we get them on the run, to tip them over, and then it's game over for these big nation states. I mean, when the Soviet Union collapsed, it happened quickly. I'm not suggesting the U.S. is going to collapse quickly, and I'm not sure. I mean, I like Brent a lot, and I like his theory, but I'm not sure the dollar is the last fiat to collapse. I think there's a chance that it's right in there with everybody else at the same place, same time. Because if you actually look at it from a trade flows and a balance sheet perspective, there's almost no country in the world that's in worse shape than we are. I mean, it's we're pretty. I mean, if we weren't called the United States of America, if you looked at our balance sheet, income statement, fiscal behavior, et cetera, you would say this place is a banana republic. You know, I mean, it
I
really
mean,
does.
to play devil's advocate there, I listened to a good podcast recently where I forget the name of him, but he was talking about even though it's this cleanest dirty shirt in the hamper type concept. And he was saying that even though he was throwing out some numbers, the US does have their fiscal problems, the debt's obviously exploding higher. But at the same time, when you look at the tax base, right, and I found this really interesting. He was basically saying that if you look at the profitability of US companies, they leave pretty much every other country in the dust. You almost have to get every other country together in the same room, pool all their profits just to compete with the US. So that's your tax base, right? The ability for the US to actually extract value from their society and more or less service the debt. And I think this is also an interesting transition. We have most certainly moved from a financing mechanism to a refinancing mechanism. We're now in the world where it's just about servicing. And you actually see this in just society. Everything is subscription, right? People subscribe to their mortgage. They subscribe to their car payment. They subscribe to everything. So it's like,
Yeah,
what is my monthly incomings? Can I service that? It's not about like, can I afford it? It's can I service the mortgage?
yeah, that's exactly right. That's exactly right. And it's gotten harder because, interest rates are higher and I mean, the credit card rates are higher. I mean, you're starting to see the impact on the economy too. You're starting to see delinquencies rising. We just started to see air travel in the U.S. is starting to go down. I mean, to me, there are a lot of indications that the economy is slowly but surely starting to roll over as a result of the money, tightening that they did in 2022.
So that's a really interesting thing because I've seen a lot of this recession talk of late, and it's like the most telegraphed recession. I'm sure they all are, right? Everyone's predicting a recession, and it keeps coming, and then it never actually happens. And then it finally happens, and no one's prepared for it. So we're seeing a lot of these data points starting to turn over. I've seen like job revisions where they're saying, "Oh yeah, back 12 months ago, yeah, we actually missed about 1 million jobs, so it's actually a lot worse than it looked
Yeah,
like."
wasn't that something? Yeah, it's. I mean, the wags are saying, well, it gives them cover to cut, and it probably does. I mean, maybe they'll do a 50 basis point cut. It's look. I mean, relying on the economic numbers put out by the government is just a fool's errand because they're all made up, they're all distorted. And they claim inflation is 3%. I just had insurance on a house that I own, go up 100% year over year, right?
Yeah,
And
wow.
yeah, and so that's not 3%. I mean, anyone who lives in this world knows that inflation is not 3%. It's arguably not even 6%. But if I can find somebody who let me book a dinner for a 6% fee, or, I'm okay with that.
Yeah. So you mentioned because I also look at the gold more recently, and I would actually recommend this for all Bitcoiners. When you're like you just want to do something for yourself, go and buy yourself a silver coin, right? And actually like see what it is in the physical because it's actually quite nice, right? It's actually quite a beautiful thing. But you've got
Very shiny, yeah.
gold. Yeah, yeah, it is. It's shiny, right? It's just a very primal thing. But you see gold, obviously, as you said, 2,500. Silver's been a bit lagging behind that. How do you see? Because I mean, the gold silver ratio is I think 85 or 86 at the moment. And when I look at that, and having spent a lot of time in the Bitcoin space, you kind of look at Bitcoin, you look at all the other assets, and I'm like, the gold silver ratio kind of looks like shitcoin versus Bitcoin. And I wonder, like, but at the same time, I think that silver probably has a more probable result of actually resolving higher once again. How do you think about that kind of split between those two? I mean, I spend a lot of time looking at the supply and demand balance of Bitcoin. How do you think about the supply and demand balance of gold and silver? Because there's manipulation that's going on, right? You hear this quite a bit. How do you factor all these things
It's
in
it,
for the
it,
metals
it, it,
markets?
it's very hard. I mean, you kind of put your finger up in the air. There is manipulation. There has been manipulation. There always will be manipulation. But I say that in the sense that they can't entirely manipulate it because ultimately the market does, come into play. I mean, they manipulate it at key points in time. They try and hold it down. The supply right now is extremely tight for both metals. The silver is actually running a deficit. Most of the gold is going into the foreign central banks. The U.S. ADRs or I'm sorry, UDIS ETFs for gold have not really been growing that much. In fact, they were until recently shrinking. So, I think it's a matter. I mean, I still don't think look, I think we're going to have an enormous bull market in sound money assets. Okay. And by that, I mean silver, gold, and Bitcoin. I think there's going to be an enormous bull market. I think we're kind of on the cusp of it right now. I mean, gold is kind of breaking out and Bitcoin's kind of hanging in there, had a nice bounce off the low, early at the beginning of the year. Um, so, my view is that it's coming for all of these assets, and it's just a matter of awareness that the government can never stop printing, and that these are the best performing assets out there. And until very recently, I think one of the things I know when I talk to potential investors and investors in my fund who have other investments, they're like, well, yeah, okay, so if your fund's flat, that's okay because I'm making so much money in my stocks. I mean, I think the stock, if you pull up the charts, the stock market valuations are really, really high right now. And so, I wouldn't personally want to own common stocks. I'm not at these kinds of valuations because, you got the chance for those valuations to turn down and I think they will. So, stock market to me is a potential landmine. But they continue to goose it and it keeps growing up. So I haven't really been shorted either. I just know that it doesn't really represent fair value in today's
It's a
market.
very interesting dynamic because when I look at the world, right, it's a volatile place, right? Humanity is volatile. We do all sorts of weird shit all the time. And, markets are, trying to adapt to all these things on individual company basis. They can be wildly volatile. But when you look at the stock market index, it's like a straight line higher. And it's a really weird looking thing, right, in log scale. But if it's just this really weird manipulated linear move. Something else I noticed, which is quite interesting, is that Bitcoin trades a lot more like a commodity, where you get volatility to the upside, and it actually goes quieter during bearish trends, which is much more like what gold, silver, commodities tend to do. Whereas the stock market is the complete inverse. It's essentially low volatility crawling higher or grinding higher, and then you get these high volatility swings to the downside. And then usually there's some kind of action that comes in that pushes things back higher and gets sentiment moving again. It's those interesting dynamics of like, how do you allocate, right? Particularly for my old man, how do you allocate in this world where stocks can suddenly get a court case and they get 50% to the downside, right? And they get cut in half. How do you actually allocate? Because there's so many companies, I can see the risks left, right, and center. Gold, I understand it because it's just going to be there. Bitcoin, it's just going to be there. Its job
Yeah.
is to not die.
I think I think the biggest no-brainer investments today are in the asymmetric things that the government can't print, and the two that fit that, or three that fit that bill, are gold, silver, and Bitcoin. So, I think you start there. Certainly some stocks make sense. Commodity stocks will do well. I invest in the gold mining stocks, and the history there is that if gold goes up 10%, the gold mining stocks will go up 30%. Now, they haven't been doing that recently, and so they're still quite undervalued in my view. And at some point, there's going to be a catch up. But I think you have to develop a macro theme, and then you invest around it. And I'm very highly confident in the macro monetary debasement theme. I mean, I think they're in a doom loop. They can't get out of it. We've gone past the start point by far enough that if anybody wants out, they're gonna it's not gonna work. So my view is that stick to the stuff you understand, and you'll be okay. There's even an argument for holding some cash because if like we're skating between two extremes, right? One is high inflation, and the other is deflation. And let's say we know that if we get a big deflationary impulse, we know they're going to print. But one of the things I think people have to kind of play through their minds: what if they print and it's not enough, and the
Mhm.
deflation just keeps on going? Do you know what I mean? um,
Absolutely.
Kind of a 1929 scenario where we really do kind of go into something like the Great Depression. And of course, the Fed will respond by printing a lot of money and probably ruin the currency. But you could have the worst of all worlds. You could have an inflationary depression where all activity is falling, and stocks are falling, and yet you've got huge inflation. So bonds aren't protecting your value either. And if you look at the depression, you study it. The people who did well in America in the depression are the people who had cash, because the prices of, I mean, houses in the United States in the Depression, 29 to 33, went down 65%. So I had a grandfather who I don't think, I think he had a smaller house where he was renting. I'm not sure, but I know that, and he had a very safe job. He was working for an insurance company. He didn't get laid off or fired in the Depression. And I think he bought his house in the mid 30s at probably half of what it would have cost him in 1928. So and he was able to, and there weren't big mortgages back then. There were shorter mortgages and so forth. But he probably saved up his money. So there's even an argument, quote unquote, for holding cash. Now, in a hyperinflationary environment, cash will be trash. But I think that people need to be kind of diversified. You don't the it's the old, you don't put all your eggs in one basket. And I mean, And I get why young people put all their eggs in the Bitcoin basket. I get that. I don't think that's nuts, but I think they have to realize the risk they're taking, in doing so.
And you
Um,
also see this with, I mean, Warren Buffett's got the biggest cash pile he's ever had, right? This is the greatest
exactly.
investor of all
And he's
time.
not a
And
stupid guy. Yeah, he's not a
no,
stupid guy at all.
he's
So
preparing to re-liquefy if something was to go really, really pear-shaped. But also, I think he had an investor letter where he said, I can't find anywhere to put this money. So I'm not going to beat the typical returns because I just need to hold cash until something happens.
I think that's right. And so, and look, I think the world, I mean, it's interesting to me that, you see the problem, I see the problem, many other people see the problem. Of course, the whole world doesn't see the problem, but even some people in pretty high places are seeing the problem. I mean, Ray Dalio sees it. Even Jerome Powell said this fiscal situation is not sustainable. I mean, that was kind of shocking to me. I mean, here's the head of the Federal Reserve citing Stein's law, that if something can't go on forever, it's going to end, right? I mean, I found that I find that kind of incredible, right? I mean, okay, Jay, so what are we supposed to do about it? And by the way, why are you enabling it? So it's kind of a mess.
If
It's
I'm not
really the only.
mistaken, the US government, I forget what CBO, one of these offices, they've actually got their own projections. It's just like a straight line of the debt
Yeah,
heading unbelievably higher, and they say
yeah,
themselves it's unsustainable. It's like, fuck,
yeah,
yeah, I wouldn't
yeah,
want your job.
and yet, you don't really see any serious discussion of how to deal with it in Washington D.C. I mean, I don't know who's going to win this election. It appears to me that Kamala's got somewhat of an advantage. I'm not sure if that's right, but that's what they've made it appear like. And if she wins, I mean, it's not like she's going to stop spending money. I mean, she wants to give people $25,000 to buy a house, and I'm sure they're talking about universal basic income and all kinds of other things and all things which, by the way, we don't really have the tax income to support. The only way to do it is to print the money and hand it out. And that's the modern monetary theory school of economics, which is, well, the government prints the money, don't worry about it, don't worry about debt. And that's all fine until you take it to its natural extreme, which is if you print so much money that it becomes monopoly money, it's worthless. And and that's, I think that's clearly a tail risk. That the government here will not respond to the problem in a responsible manner until people are screaming at the top of the lungs, this inflation is killing me. And by that point in time, we'll probably be so far down the road that we will literally be on the path to the money failing. And, people will start transacting in other things. And maybe the Federal Reserve or the U.S. federal government will try to introduce some other currency. But, after they've just screwed us with massive inflation in the one currency, and what makes it, like UBI, or I mean, CBD, central bank digital currencies, well, why should we trust that? Do you know what I mean? I mean, they just screwed us with the dollar. Why? So I think, and as you know, what I'm describing here is Gresham's law, which says that, people will, if they see the money isn't holding its value, they will seek to spend the money as quickly as possible and get into things that will hold their value. And that could be tangible stuff like a house or even a car, although the car depreciates. But, it could also be, Bitcoin or gold, and because they're just not, the supply is limited. And so, that's a very powerful, model for preserving wealth.
And I've definitely made the mental split, right? Because the longer you spend in Bitcoin and probably gold as well, you start to think about currency pairs, right? I remember when I first got into this space and I'm trying to work out, you're buying shit coins on Binance and I'm trying to work out like what this weird divisor is. Like, what do you mean? It's like 0.0005 sats or whatever it is. And like, it was the first time me as an Australian, aside from, a cursory trip to Thailand, that you have to like work out how exchange rates work and seeing how these different currencies actually transact. And something I've definitely come around to is splitting the store value and the medium of exchange. And
Yes.
I think even Saylor talks about this. My,
Yeah. He
my,
does.
my most likely thesis, I actually don't think that hyper-Bitcoinization is going to happen the way that, the maximalist view would be, that we're going to transact in Bitcoin. It's going to be the only currency. I don't think that's a probable thing, certainly not anytime soon. What I do think is we're going to get this splitting of medium of exchange. The currency that I borrow, the currency that I spend in is your local fiat. And then you're going to have these store of value assets that you can essentially borrow against, margin off, use just to preserve your purchasing power between these periods. And actually splitting those two, I think, is really, really interesting. And I also think that, we saw at the Nashville conference, they were talking about a Bitcoin reserve. Right now, I put a low probability on this actually coming to fruition, but the fact that it's being talked about on the
Absolutely.
same stage as the gold in Fort Knox. That was the signal I took away from that.
Absolutely. I think you're dead on correct in your assessment, and obviously Saylor has pushed it as being a store of value digital asset, not really as being a currency. And anyone who's a currency expert says, well, Bitcoin can never be a currency, one, because nobody's using it for transactions, and two, because it's too volatile. And those are valid points. But all I would suggest to you is that give it a little bit of time. We're still in the very, very early days of this asset, and the Lightning Network is still very, very small. But I was glancing at some numbers the other night and doing some research on it, and boy, Lightning Network is growing
It's
really,
growing.
really
Yeah, it
quickly.
is.
Yeah, the number of transactions, the liquidity, the channels, all of it. I mean, I think I saw a piece of data that said channel growth is like 1,000, 10,000% a year. I mean, it's going up, and so look, it's got a long way to go before the Lightning Network competes with Mastercard, what I mean, or Visa.
And that's the correct analogy too, right? Bitcoin competes with the central bank, whereas Lightning Network competes with the Visas and the PayPals and the
Right. And,
MasterCards.
and and those are all very developed, and nobody's feeling any pain there right now. So, whereas we are starting, everyone feels the inflation pain, and so the store of value case is pretty. I mean, it's clearly the best use case right now for Bitcoin. Although interesting, I mean, you spend time reading Alex Gladstein's work, and you come to the conclusion that hey, there's some places where they don't have credit cards, and they're not even banked, and the local currency is shit, and they're downloading Lightning wallets and transacting in Lightning transactions. So it will bottoms up. In my opinion, it's going to occur, and I think to say that it's never going to occur and that the Satoshi is never going to be a numeraire, I take the other side of that. I think my kids will not know what a dollar is, or my grandkids certainly, and that things will be priced in Satoshis. I mean, call it maybe 10 or 15 years, which is a
Interesting.
long time. I mean, it's not tomorrow.
Oh, I mean, it's literally double Bitcoin's life, right? It's only been around for
Yeah,
15 years. So
exactly.
imagine where we're going
But
to be then.
I do think that's where we're headed. I really do, because it is, it is a better form of money from a store of value point of view. But you're right. I mean, in the interim, you can just live a dual existence. I mean, you save in Bitcoin, and then anytime you need to make a payment in fiat, you just convert your Bitcoin to fiat and pay it, and that's that. And anytime you get some fiat in terms of your paycheck or excess money that you want to save, you convert it into Bitcoin and you save. So, I mean, that's obviously what's going on with a lot of people today, and that's fine. But the medium of exchange piece, in my opinion, is going to be very real. It's going to grow, and it will ultimately lead to full replacement of the dollar. But probably more quickly than that will be, the inflation is what will lead. It's when people are getting roasted by inflation, really roasted. I mean, we saw 9% as the peak in the last cycle, which is bad, but
And that's reported.
exactly, and
That's a reported
very
number.
good point. It's much higher than that. Very good point. I mean, look, wait, I mean, like you were mentioning earlier, like Turkey, you're in Istanbul. I mean, they're having very high inflation. When inflation starts to get to 15, 20, 25%, 30%, which is entirely possible in my view, the next 5 years, then people start getting very serious about this and realize, okay, I cannot hold, I mean, when I get a dollar, I got to get out of it as quickly as I can. Because
And we're actually seeing this. I think a microcosm of what we're going to be looking forward to is actually what we're seeing with Tether in emerging markets. Because for people in Turkey, for people in Latin America, their currency is going through what we've been discussing, and they are selecting to go to the US dollar because they now have access to it on digital rails. And if you think about
exactly.
like the delta between the Turkish lira and the US dollar is actually not that dissimilar in terms of like a quantum leap from the US dollar to gold, Bitcoin, silver, right? That sound
That's
money
right.
jump.
That's
It's of
right.
a
Yeah,
similar
no,
magnitude.
yeah. I mean, look, fiat currencies stink, but some stink more than others. And obviously, the Istanbul, I think they use the lira, right, in Turkey. I mean,
Yep.
that thing is inflating at, I don't know, 20, 30. I mean, I heard at one point, I heard it was like 70% a year. Well, okay, in that case, owning a dollar, which is inflating at 9% a year, is one hell of a lot better than that lira. Do you know what I mean? And
That's it.
Ecuador had hyperinflation. They went to a dollar standard and they recovered. So, but what I'm suggesting, is that the mathematics and the behavior of the United States makes us look like a third world country. We're doing all, we are the world's reserve currency, losing that status, but we are still. And, what's going on is we're behaving like a third world country because, and I think the politicians and others think, well, we can get away with this because we're America. We're the reserve currency. We won World War II. We've got all the military, blah, blah, blah. But guess what? I mean, math is math. And if you start, any entity, if it starts spending a lot more than it's bringing in, and it starts incurring debt and building up that debt balance, I mean, eventually a day of reckoning occurs, where you just can no longer support the debt with what you've got in terms of income. And it's hilarious because they say, well, let's just tax the billionaires. I mean, that would provide, like, 3 days of the interest cost. I mean,
Yeah.
I
Yeah,
mean,
the scale of things
massive.
is just irrelevant. You take all their money and you've got the next
If you
15
take all their
minutes of
money away,
government
it still
expense.
doesn't solve the problem. I mean, the problem is we're just spending way, way, way too much, compared to what we're generating in GDP. So it's the money. I mean, Lynn's book is great on this topic, right? The money is broken. I mean, basically, the money is broken, and we got to fix it. And there are a lot of different ways to fix it, but I think Bitcoin's the best way to fix it. But owning gold is not a bad idea either. It will perform much better than fiat. I know that. And for some people, it's a better choice because it's less volatile.
And do you see it? In fact, sorry, just on that point, I put out a tweet a little while back where it was a bit controversial, but I was quite interested in the result. And it was my thesis was at some point over the next, let's say, 2 cycles, there will be Bitcoiners, probably the guys from class of 2013 first, and then eventually the 2017. There will be Bitcoiners who actually swap a portion of their Bitcoin for gold. And the response came back, and I would say it was actually better than I expected. It was probably about 70% saying, what are you insane? And there was 30% who were saying, absolutely, that makes so much sense. And when I was thinking about why I own gold, and people ask me this all the time, it's not because I think it's going to outperform Bitcoin. I'm quite confident Bitcoin will destroy it in terms of performance. However, let's say I needed to come up with a meaningful amount of money and I didn't want to sell my Bitcoin, right? Gold it's my fiat in inverted commas that is not as volatile. It's going to do much better than the currency itself. And I'm almost preloading. It's going to be very hard for me to sell my Bitcoin because it's just,
Yeah, nobody wants to, right?
no one wants to. Gold, I'm okay to sell if it's up or down 10, 20%. So it's kind of that like
Absolutely.
liquid store of value that is going to, I know it's going to be there.
Yeah,
Bitcoin will be there, but it may not be the correct time for it. So I use that to like balance my positioning overall.
that's a very smart way of looking at it. I've always looked at it that way too. People say, "Why do you own gold?" And I say, I own gold because when Bitcoin was at 70,000 and went to 15, I was like, "Oh, this is great. I got a bunch of gold and Bitcoin's really cheap now." And I sold some gold and I bought Bitcoin, right? I mean, so it's kind of like a sound money stable coin, right?
Yes,
It
yes.
doesn't go up as much, doesn't go down as much. It's not going to perform well, but it's cash that can't be printed, and it can't default. I mean, and so yes, I mean it has that characteristic, and again, it goes to how your age and your risk tolerance. I mean, I've always said it's good for bribing the border guards, and I think everybody should own a little bit of gold, right? I mean, it's analog sound money. I mean, I love it. Greg Foss used to, my good friend Greg Foss, who I miss dearly. He was so active in the space. He's been less active, but he coined the term. He said, "Gold is a CDS on Bitcoin," right? I mean, if Bitcoin
Mm,
fails, you want to have gold. And I think we're beyond the stage where I have much worry that Bitcoin's going to fail. I mean, 840 odd thousand blocks, and 15 years, and a lot of things ironed out in terms of risks. The fork wars, the block size wars, the core developers getting their shit together, etc. I mean, I'm pretty confident that the technical risk in Bitcoin is low. I mean, just the fact that a guy like Saylor has gone so all in on it, and he's a brilliant engineer. So I don't really think that risk is much of a risk. But as you point out, it's nice to have something that you can sell without feeling like you've got to sell it when it's down. And Bitcoin. I mean, the last thing you want to do is sell it when it's down. I mean, that's just awful. If you
yeah.
needed
And what would you
liquidity.
say are the big risks if you were to kind of point actually for both markets, for precious metals and for Bitcoin, where would you say are the curveballs?
Yeah, so that's a great question. I mean, I think just we don't know what the other side will do in terms of the things they could pull out to try to throw sand in our eyes. I mean, they could do a 6102, which would be to confiscate it if they really felt threatened. I think a lot of us wouldn't comply, but that's a different topic. I think that Saylor said one of his concerns. He told me one of his concerns and risks is that just the core developers go rogue. But I don't think there's a likelihood of that, a big likelihood of it. And I think that the way the process of approval of changes gets done, that it's unlikely that the thing will drift in the wrong direction, and or that we'll have another fork war or another, I should say another black size war. So I think that's one of the risks. It's I guess it would just be governments get responsible, and I just don't see any evidence of that. That's probably the biggest risk.
That's the one thing that's not on the ballot in the US is a fiscally responsible government.
Yeah, right. It just doesn't seem to be. But you know what, James? In investing, anything can happen. You know what I mean?
Absolutely.
Absolutely anything can happen. And I think we have to be prepared for, them trying to somehow change the rules and say they're getting responsible, and then maybe throwing a lot of, roadblocks in front of us. Either taxing it heavily or, just making it more difficult. We saw what they did with Operation Choke Point. They obviously don't want this to threaten their existing system. And so I think, we have to be creative in our minds of what can they do to try and stop it. And I don't think anything they do to try and stop it will be successful. But I do think, having seen them operate for 40 years and knowing, the way they suppressed gold in the 2013 period and just seeing what they do, we should not underestimate them. And we should not underestimate their ability to throw curveballs at us. And this is why, and this could create big drawdowns, one has to be kind of ready for that, to kind of quote unquote recognize what we're up against. And we're up against a bunch of people who are very privileged and are trying to defend their system. And, they've got the mechanisms, they got the levers of government, they got a big megaphone with all the press and everything else. Now, we're tearing all that apart by doing podcasts like this and talking to each other on the internet and organizing in conferences and, et cetera, et cetera. All the things they've got, we threaten them, and they could come say, we're going to seize all your Bitcoin. And those of us who have it in self-custody will say, yeah, good luck with that. Right. But they could do it. And that might force people to have to move to different countries or break the law or whatever it might be. I think we should not, the people who run these governments, in my opinion, are psychopaths, and we should not underestimate what a psychopath will do to try and hang out of their power. We should not be naive and think that, okay, we're just going to kind of peacefully transition over to a Bitcoin standard. These guys are going to just fade away into the dust. That might happen. I hope that happens. Certainly one thing that's to our advantage is just that, the older psychopaths are dying off. Do you know what I mean? And the younger generation, your generation, is learning about this and is very excited about it. And so, and look, even guys who are deeply flawed and within the fiat system have decided to join us, realizing that they're better off joining us than fighting us. Guys like Larry Fink, right? So we've already got some defections in their ranks, but don't underestimate the possibility that they're going to try and do things to really mess us up. And this is why I think everybody has to recognize the nature of the fight that we're in and the nature of the asset that we hold. And, I don't care if Bitcoin goes to $1. If Bitcoin goes to $1 a coin, I'm going to buy every single one of them. Right? It's just, there's a point at where it just can't go. Right? I just don't see how they get rid of it. I really don't. I think they finally bumped up against something that it's a case of checkmate now. And that's perfect because that's your code name. That's your operating. I said that not even realizing who I'm talking to, right?
There you go.
We have them in checkmate, but well, no, we've got them in peril, and it's not complete checkmate yet because we haven't fully won. But it's just a matter of how many more moves have they got and how much more time. That's really, to me, that's the issue. And
it reminds me of the gold price in Weimar Germany chart, where it's volatile as hell, but it's going parabolic in log space, right?
I think that Marmacan chart, Dan Oliver did that chart. It's a fabulous chart, and I think that's right. I really do think that's that's where we're going. But the year's scale may not be correct. That could be a 10-year event. Some think it could be a 20 or 30-year event. I don't think that. I think the world moves too fast right now. When I look at things like, as an example, like it's part of the common knowledge game, right? Like look at the Biden example, right? Everyone knew he was senile. Everyone knew he was incompetent for the job. They kept lying to us about it. They kept holding him up. And then finally, one day he comes out on stage. He looks like a complete blithering idiot, and suddenly everybody knows, right? And boom, he's gone.
And everybody knows that everybody knows.
And everybody knows that everybody knows. I mean, it's that moment. It's that Overton window shifting, recognition, and so a lot of people right now know the U.S. government is in a really tough shape and they're fundamentally bankrupt. Okay, a lot of people know that. You know that. I know that. Lots of people know that. But the world doesn't really broadly know that. And there's still people who listen to the financial media and they buy bonds. They do, they do all the normal stuff. They don't think through the logical implications of that. But Bitcoin at 250,000 and rising, and gold at 4,000 and rising, and the government deficits at 4 or 5 trillion a year because they're doing yield curve control and they're sending out UBI checks to everybody, and more people are going to become aware of it. And very similar to the way the Silicon Valley Bank one day was a very fine bank and had no problems, and then they sold some bonds, and somebody grabbed a calculator and did the math and said, oh my God, if all the other bonds they have are like this, they don't have 20 billion of positive equity, they got 20 billion of negative equity. And then somebody got on the phone and a week later, 45% of the bank's deposits went out the door in one day. Right?
Yeah, it was wild.
Yeah, so this goes to the, this is the gradually then suddenly, right? And so, I'm not suggesting that we're close to launching on that curve yet, but, you can kind of see it out there in the distant horizon. Do you know what I mean? At least in my opinion, I can see it. I think it's there. And, I don't know if it's a year or 2 years, 5 years. I don't think it's more than 10, because the math is relentless. I say this over and again. The math is absolutely relentless. And, they've just got to keep printing this money, and that's got to lead to more inflation, and that's going to lead to more trouble. And so, with each iteration, it is like that Weimar chart, and look, gold, shot up when COVID came along. Gold was at 1365 before it shot up to 2000, and then, Powell got responsible and raised rates, and gold kind of traded sideways from 2000 to 2070 for a long period of time. But now gold is smelling out that, oh my God, these deficits are getting bigger, and the problems haven't gone away, and the debt is getting larger, and it's compounding on itself. And gold's like, I know what this means. More money printing coming. Boom! It goes right through that 2070 and it squirts up to 2,500. And what it's telling you is, the people who buy gold are aware of it. And they're buying it like crazy over in the Far East. They're all very aware.
I was going to say a lot of them are foreign governments as well.
Yeah, they're all very, very aware. They're not stupid. So, I think what's going on is there's a small segment of the world that fully understands this issue, and Bitcoiners understand it, gold people understand it, foreign governments understand it, certain financial investors understand it, but we're the early adopters, and we're waiting for mainstream adoption. But as the mainstream gets further and further fried by the inflation in their basic lifestyle, they're going to come over and they're going to be the middle to later adopters. And then, of course, the last adopter is going to have to pay the most. And the people who hold dollar bonds and dollars in general are going to lose the most because, they might have retired with $1 million of savings. And, sadly, in 10 years, $1 million, might not even, I don't know, might not even buy you a car or something. Who knows? It depends how much inflation we have. But you get my drift. It's a cumulative thing, and it's, in my opinion, it's coming. There's just no doubt, and we can all see that. And so, but it's tough. People want instant gratification, and I know a lot of people are very impatient with the Bitcoin price right now. It's kind of stuck at 58 or 60. I'm kind of like, who cares? This reminds me of, I don't know, it was. Back in 2019, it was kind of stuck between 5,000 and 10,000 for a long time.
Very similar. In terms of market structure and what I'm seeing, it's 2019 is, I've been calling it chop solidation, and it is.
Is that right? Is that what? Yeah.
Chop solidation. It's almost exactly the same.
Is it? Oh, that's interesting, because what that would suggest then is that at some point here, and probably I'd be curious to know your thoughts on the timing. It strikes me that at some point here within the next year, this thing's going to break through that 70 and not look back. And we're going to go, 120, 150, and wherever. How do you see it? Because you're on top of this chain analytics, and this is your business. I'm just an investor kind of looking at it from outside.
Yeah, so chop solidation, we wrote a piece back in April where we're like, guys, look, if history is a guide and all these different metrics, like basically we've trended up for 18 months. Something on the order of 6 months of sideways is probably what we're due for. And my thesis was, close your eyes, And in 6 months' time, we'll be at the exact same price. When I wrote that piece, it was 64K. Here we are at 61K. Close your eyes, but bulls and bears will be liquidated left, right, and center, right? All along the road to get there. So it'll be a whole lot of nothing.
When do you see it ending? When do you think that next run begins? That's what everyone wants to know. And actually, that's kind of what I want to know.
Yeah. No, my instinct is, and we released a piece on Monday called "Is Bitcoin Ready to Trend?" And a lot of the tools that I look at. So a great example, the 90-day price range, right? How much Bitcoin's traded. It's kind of a metric of like a Bollinger Band squeeze, right? How close are they?
Right. Good,
The only periods that we've seen it this close and this tightly range bound is early bull markets like 2016, early 2020, those kind of environments, and right before major capitulation sell-offs at the end of a bear. But that said, for the most part, the mechanics and under what looks like under the surface, it's substantially, it doesn't look like a bear market. It really does just look like a big consolidation, reaccumulation period. So my instinct is we're getting very close to that. Obviously, markets will do whatever they want, but I feel like we're within, probably within the next month, we'll probably start to get some momentum. Yeah, no, I think we're getting close, but of course, it's gonna depend on what goes on with rate cuts. It's going to what happens with liquidity. So there's all these different dynamics.
A lot of other factors, and it could do one more cleansing plunge. I mean, I've got 100%. I've got some cash set aside in case it does that because I want to, I'd love to buy it down a little bit. But
that's exactly what you want to see too, is like a nice wick, like an undercut that really spooks everybody and
really
gets people,
everybody again, and then
the shorts get bullish, and
we go right to 120.
100%. The slingshot.
Yeah, I kind of feel like that's in the cards, and I kind of feel like that'll happen probably before year end, certainly before end of first quarter next year.
I think so too.
Yeah, I mean, and it also fits. That also fits with the lag on gold. I mean, if you look at the 2019 example and the gold move off at 1365 to 2000, the Bitcoin move was kind of delayed 3 or 4 months, and so if the gold kind of broke out in March, and broke out harder, to 2500 next few months. So, add a few more months on top of that. Yeah, we're talking this fall probably sometime, right?
I think it's really getting towards the later stages of it. Very rarely does Bitcoin go to sleep like this for very long.
Yeah, that's my take. And of course that'll create a lot of craziness, and everybody will think it's going to 200,000, and you get a lot of buyers, and yeah.
And then we rinse, repeat.
That's
back in consolidation.
So we'll go up to 200, and then we'll correct back to 120. And the guys who bought at 200 will be screaming that they made a mistake, which they didn't, because it's a tough asset in that respect. I mean, it is the nature of the beast. And I bought my first ones in 13, and I bought a lot in 17 at $15,000, $17,000, and that all run up, and of course it went to 10, and then it went to 5, and I bought more. But it's hard. I mean, it is hard. You have to understand what it is and how it trades. Because if you're just a newbie coming into it and you think, oh, I should buy some of this, and you buy it and it's at a high price, and then it corrects 60%. Well, it's hard not to feel, like, oh shit, I blew it. I mean, and that's why, the other thing I recommend all my investors when I'm talking to them is just, figure out what you want as you're waiting, and just dollar cost average it. Just buy it regularly, every month or every week or whatever it might be. I mean, I dollar cost average all the way through the Sam Bankman-Fried event, from 60 down to 15. And boy, am I glad I did, right? I mean, it was...
And what I would add to that is that there's the standard DCA, but there's also trying to buy, and that's what I love on-chain data for. I want to buy, but I don't want to buy when lots of guys are taking profit. And I also want to buy when there's just a little bit of blood in the streets. So rather just like DCAing when the money comes in your bank account, which I've done, for many years, now I just wait for, okay, well, I know this thing's going to dip down at some point. And what I want to do is wait for enough people who were the old me to go, oh, don't worry, I'll buy it back later. I'll wait till it goes lower. That when they're selling, so is everyone else in the crowd. That's the time when you actually want to do DCA.
Yeah. Well, that's the other thing I've done is I've done a ladder where, okay, so I've got an order in at 55, an order in at 50, an order in at 40, because as you and I both know, sometimes it does those wicks down pretty quickly. And you might not be, if you're not paying attention, you don't get filled.
Or if you're asleep.
Yeah, exactly. Well, that's right. Overnight. Yeah. I mean, so you don't get filled. So having laddered buy orders is never a bad idea. So yeah, it is what it is. I mean, I think that, we're gonna wake up 5 years from now and think of these as the good old days, and when you could get cheap Bitcoin, because it's going to be in the hundreds of thousands. And that just is what it is. And And by the way, that won't be a terrible price because you're going to wake up 10 years from now and it's going to be $1 million. So, it's a great savings asset if you can handle the volatility. That's kind of how I see it.
And you position accordingly so that you can handle the volatility.
Well,
Is
that's
the nature of the
exactly
beast.
right. You don't put all your money into it. If somebody asked me the other day, would you put all your cash into Bitcoin? I said, are you going to need that cash possibly
Mm,
in the next 6 years? If the answer is yes, then the answer is no. You don't put it all there
yes.
because you could, if what we all know is you don't, I had a lot of it at 60 and, it went to 15 and boy, I would have been, if I had needed some cash when it was at 15, that would have been a real bummer, because I knew it was deeply undervalued and I didn't want to sell it there. So, it's just a matter of kind of planning out what you think is going to occur. It's got to be long-term savings, I guess is what I'm trying to say. You know
That's
that.
it.
But, yeah.
Absolutely. Yeah, and, Larry, this has been fantastic. Just to wrap everything up, my last nickname that my old man gives me is Jim Reaper, because I've always got these stories about the world being in slightly dire straits. Even with that said, what would you like? A lot of the people listening to this are going to be hodlers, right? They're going to be gold bugs, people who just want to understand, like, how do they survive? What kind of tips do you have for the average guy for the next decade? How do you survive in this kind of environment and just do better than the next guy?
Yeah, that's a great question, James. And I'm, like I said, I'm writing a book which it should be out at the end of this year. It should be out kind of December, January this year.
Do you have a
Which is
title for it,
yeah,
or you don't want to share?
I don't want, I had one. I'll tell you what, it used to be Fix the Money, Fix the World,
Yeah.
but and I might still use that, but somebody actually gave me a better one. It's so good. I'm not gonna.
Hold on to it. No,
I'm,
no,
I'm
no.
holding
Hold
on.
on to it.
I want to surprise. It's a
Good on
killer.
you.
It's a killer title, and I'm not gonna say what it is.
Good on you.
But I mean, the general thesis is, how everything got broken and how we can fix it, and it's not a gloom and doom book. It's a book of optimism because, and as you know, once you get into Bitcoin, you really understand it. You realize what it's going to do. You realize how it's going to improve things. You do become optimistic, and in
Mm.
spite of the fact that the politics are all messed up and the world's messed up, and we have huge inflation, all kinds of problems. I mean, the combination of the distributed technology of the internet and the distributed money in Bitcoin, in my opinion, are going to make this world so much better for my kids and young people. Now, that's not to say that we're not going to have a lot of turbulence and difficulty in this fourth turning that we're in. Sadly, I think we will. But, look, I think if people in general can kind of keep their head about themselves and, stick to living within their means, that's the other thing. I haven't said this throughout the whole entire interview. I think it's very important. Do not use leverage.
Hmm.
I mean, we've got the bursting of a sovereign credit and debt bubble. We've got the bursting of sovereign currencies. And, go look at the Mermican-Weimar chart. It's all over the web. You can find it. There's going to be volatility. And so, you want to own things that people can't print. And Bitcoin, gold, and silver are the three primary things. Real estate is probably the fourth, but they can tax that, which I don't like. And just own them with as little leverage as possible so that you don't get shaken out of them. And then, go about living your life and, try and help other people and try and convince them that this is the right way to go and, eat good food and work out and stay in shape and, recognize that no matter how bad things are, we will, as a species, we will make it through this. I mean, things were bad in World War II and things were bad in the Civil War and things were bad in the American Revolution. I mean, we go through these periods where there's a lot of turmoil, a lot of problems, and we're in one probably. And changing monetary systems is not simple, but everyone's going to get. If we keep our heads about us, we'll get to the other side. And I talk about this in the book. And I don't. I honestly, actually, I think we're going to avoid a war. I really do. I think, fortunately, I think World War II scared the living shit out of everybody.
I don't think the incentives are aligned for it. I don't think China wants that kind of. I mean, they're
Nobody
business
does.
people. I don't think
I
they
think.
want
I think.
this.
I think every sane. I mean, the only way we have a nuclear war is if we have an insane person get a hold of the button. And I don't think the odds of that are that high. I think everybody else who's somewhat sane recognizes that there's no winner in that war. And so, although we've had all these little proxy wars, when we get sound money, they're not going to have the money to run those anymore. So those are going to go away. And so, I just say, embrace this new world of, learning on your own, hanging out with people who are positive, using the internet to get, the truth and real information, and then, saving in currency and supporting a currency system that, doesn't take advantage of people. And that's kind of what Bitcoin is. And, I mean, Bitcoin is number go up, but Bitcoin's a lot more than number go up. It's honesty. It's an honest monetary system. And so, I think people should be very, let me say this. I mean, as a gold bug, I was getting very beaten up and depressed until I saw Bitcoin come along and I got reinforcements. And really, I mean, to me, the beautiful thing about Bitcoin is, it lit a younger generation got lit on fire, particularly by Safe's book. That von Mises is right and that Austrian economics is right and that the Keynesians are wrong, and we're winning. So, as Marty Bent says, we're going to win. And once you recognize that, I guess I kind of feel better about all the ups and downs and the punches in the face and all the other stuff. I mean, I mean, we are on the right side of a big important historical trend. I mean, the people who should be worried and upset are the Jay Powells and the fiat lords of the world, because they're not going to win, and their world is actually going to get a lot better, a lot worse for them. But that's as it should be, because they've really been living at all of our expense. So the book covers all of this. So I'm obviously plugging my book, but I'm not plugging it. I'm not plugging it because I need the money. I'm plugging it because if I do it right, what the goal, James, is to write a book that adds to what's been written, and because I think Jeff's and Lynn's and Safe's books are all brilliant, but I'm trying to write this one a little bit more in a folksy tone, so that to somebody who's not necessarily involved in the financial world at all, and so that they can kind of understand why everything's so broken, and see examples of that. I point out all the examples of the malfeasance that's been done by all the fiat lords, and then knowing that, say, oh, okay, I get it. Yes, you're right. This is why it's broken. And then, of course, I lay out the roadmap, and well, this is what you do, and this is how we accelerate, the repair of this. Because if we, as Jeff Booth said to me the other day, he said, look, if we all started using Bitcoin for everything, we could drain and ruin their system overnight. And he's right. But the problem is, there just aren't enough of us. I mean, we're like this small band of committed people, and we need to have, big bands of, we need to have the whole society get it. And, there are a lot of people I talk to and I say Bitcoin, they don't even know what it is. So we're a long way from that being, the condition that we need. But as, as the problems in inflation continue, maybe we're not as far as I think. I mean, maybe, and that's what, the book is. I'm writing the book because I want to try to accelerate the, the knowledge base of people. And I'm hoping that people will read it and say, oh, this is good. And then they'll give it to friends and they'll read it and that kind of thing. So that we just grow the user base, because that's what will get us to where we want to be, which is a sound money system. So it was a long-winded answer, but that's kind of my advice for folks.
No, it's good. I mean, it's the intellectual capital that comes in, the education side of Bitcoin. Something that I think is underappreciated is gold bugs were trying to get the word fiat known for decades.
Oh yeah,
Bitcoin got the job done, right?
That's exactly right. Yeah, no, I've been Don Quixote, I really feel like Don Quixote. I was just tilting at windmills for years and years and years. People thought I was crazy, and arguably I am crazy. I'm like, my wife.
I think we all are.
Yeah, my wife thinks I'm crazy, but I don't know. If you kind of look at what's going on now, it's looking like. I've actually had other people who used to think I'm crazy come back and say, gosh, you're kind of right. Some of the stuff you've been warning about for a while is starting to happen. I was kind of like, yeah, you noticed that, didn't you? It's kind of, so yeah, well, maybe you should pay attention to that, right? Have you got any gold? Have you got any Bitcoin? So yeah, yes, but you're right. Bitcoin has really, really opened up the playing field for the sound, the sound money side of life. And to me, it's just, another anecdote I say in the book, I think my grandkids will say, I can't believe you guys, there'll be some crisis, it'll get resolved. I can't believe you guys let 12 Federal Reserve governors set the price of money. What were you thinking?
It's a strange concept, isn't it?
Yeah, everybody knows that price fixing doesn't work. Why were you doing that? And well, these bankers got control and fractional reserve, et cetera. But it'll be like the way we look at. Today we look at bloodletting. In the Middle Ages, he's sick. Let's drain his blood. That'll help him, right? Well, that didn't make any sense, but that's what it seemed to make sense to them back then at that time, and so they did it, right? And what we're doing right now doesn't make any sense, and it's pretty obvious, and the book will talk about that. But we're doing it. But guess what? It's more and more people are waking up. We're learning, and humans have a way of solving problems. And this is a problem. It's going to get solved. So I'm very optimistic about where we're going, but we do have to keep fighting, and I obviously, because I mean you're going to see it for sure. Those of us who are a little bit older, I'd like to see this happen sooner rather than later, because I don't want to be ready to check out when it occurs. I'd rather have it get done and have the world be a better place for a while. So that's my view of it. But anyway, I hope that
No,
helps.
that's great, though. No, absolutely. And really looking forward to the book as well.
Yeah, well, thank you. Well, I'm working hard on it, so hopefully it'll be done on time.
Absolutely. Oh, it's hard work. I mean, I wrote 120 page for Coin Time Economics, and that took me 18 months. It was a brutal slog.
It really is, yeah. But I don't want to have it be crap. I'm trying to make sure it's not crap. So we'll see. I mean, the market will judge whether it's crap or not. Anyway, happy to come back anytime and love talking to you. It was good to see you in Nashville. And
Absolutely.
yeah,
No, thanks so much for coming on. I mean, I think people get a lot out of it, particularly the idea of how you survive in this time. So, really appreciate your time, and thanks so much for coming on.
okay, thanks, James. Anytime.
Good on you. Cheers.